Hello, everyone. Welcome back. Join us as we discover how to earn the most money possible by utilizing a high-yield savings account. All right, so today we're diving into high-yield savings accounts. In this video, we'll get into the real nitty-gritty, like what these accounts are all about, why they're worth a look, and how to choose the one that's right for you. You know that the national average yield on regular savings accounts is it's pathetic. Actually 0.057% right now, but some of these high-yield accounts are going above 4%. I mean, that's almost 20 times more. So it's something to think about for sure, especially if you're, hoping to make your money work a little harder for you. So the big question is there a catch? Are these accounts too good to be true? Well, we're going to unpack the pros and cons, we'll highlight the key features you should be looking at, and we'll even walk through how to actually open one of these accounts. So, first things first, what exactly is a high-yield savings account? Is it just a fancy name for a regular savings account, but with a higher interest rate? I mean, it's a little more nuanced than that, I think. Think of it this way. A regular savings account is kind of like leaving your money in a piggy bank. It's safe, but it's not really growing. But a high-yield savings account, on the other hand, is more like investing in a small business. It's still low risk, relatively speaking, but it has the potential to generate a much higher return. So, besides a higher APY, are there any other big differences between a regular savings account and a high-yield one? Well, that's where things get interesting. Some high-yield accounts might have higher minimum deposit requirements to open them, and some might come with monthly fees, although a lot of them will waive those fees if you keep a certain balance. So, you really have to look at the whole picture. It's not just about chasing the highest APY. You got to factor in fees, minimum balances, any other restrictions that could eat into your returns. Let's talk about the pros and cons of these high-yield savings accounts. What are the advantages and disadvantages that we should be aware of? Well, the most obvious pro is that higher APY. I mean, that means your money's literally working harder for you. It's growing faster than it would in a traditional savings account. You're earning more interest on your savings, which can really add up over time. Another plus is that high-yield accounts are still considered very low risk, especially if you go with a bank that's FDIC insured, something we'll talk more about later. So, my money is safe and it's growing faster. Sounds like a win-win to me. But as mentioned earlier, some cons too. Yeah, those higher APYs are great, but they're not going to make you rich overnight. High-yield savings accounts are really best for short-term goals, like building an emergency fund or saving for a down payment on a house. If you're looking for long-term growth, like for retirement, you're probably better off investing in the stock market. You're likely to see higher returns over time that way. It's all about choosing the right tool for the job. And here's another thing to keep in mind. The interest rates on these high-yield accounts can change. They can go up or down depending on what the market's doing, unlike a CD where you lock in a rate for a specific term. So you're kind of at the mercy of the market with a high-yield savings account, which can be a little unpredictable. So we covered the basics, what they are, some pros and cons. Now, let's get into the details. What are the key features to look for when choosing a high-yield savings account? The first thing I want to compare is that APY. Obviously, higher is better, but don't just jump at the first 5% you see. Look closely at the fees associated with the account. Does it have a monthly maintenance fee? Is there a minimum balance requirement to dodge that fee? Because even a small fee can take a bite out of your returns. And make sure the bank or credit union is FDIC insured. This protects your money up to $250,000 per depositor, just in case a bank goes under. It's a crucial safety net, especially in uncertain economic times. You don't want to be taking unnecessary risks with your savings. And a lot of people don't realize there's a limit to that FDIC insurance. That $250,000 is per depositor per insured bank. If you have, say, $500,000, it's best to split it between two different banks to make sure it's all fully covered. Now, beyond just the numbers, you also want to think about your own personal preferences. Do you want a bank with physical branches you can go to, or are you okay with an online-only bank? Online banks often have higher rates, but if you like that face-to-face interaction, a traditional bank might be a better fit. And with technology being what it is, you also want to consider the bank's app and online experience. Is it easy to use? Does it have all the features you need? Good customer service is important too. If you ever have a question or need help with your account, you want to be able to get in touch with someone who can help you out easily. So, it's all about finding that balance, a competitive APY, minimal fees, FDIC insurance, and an overall experience that works for you. It's not a one-size-fits-all thing. There are a lot of factors to weigh. So, let's go ahead and explore some specific scenarios where these high-yield savings accounts can really shine. Let's say you're saving up for a down payment on a house. Instead of letting that money sit in a traditional savings account, earning a measly 0.057%, you can put it in a high-yield savings account and potentially earn 4 or 5 times that. That could be hundreds or even thousands of dollars in extra interest, bringing you closer to your homeownership goal faster. And in a competitive housing market where every dollar counts, that can make a real difference 100%. Or imagine you're building that emergency fund. You want that money to be safe and easy to access, but you also want it to grow as much as possible. A high-yield savings account lets you do both. It's like getting paid extra to be financially responsible. But what about those of us who are thinking long-term, like retirement? Are high-yield savings accounts good for those goals too? Well, that's where things change a little bit. While high-yield savings accounts are great for short-term savings, they might not be the best choice for long-term goals like retirement. Over long periods, the stock market has historically done better than savings accounts, even high-yield ones. So, if you're saving for retirement decades down the road, you should really focus on investments that have the potential for higher returns. Think of it this way. High-yield savings accounts are like the tortoise in the race. Slow and steady, but ultimately reliable. Investments in the stock market are more like the hare, potentially faster, but also riskier. Which one wins depends on your individual goals and how much risk you're comfortable with. It's all about finding that right balance for your unique situation. Now, let's say you've done your homework. You've compared all the options. You're ready to open a high-yield savings account. What's that process like? It's actually pretty simple, especially with online banks. You can usually do the whole application online in just a few minutes. You just need to give them some basic information like your name, address, social security number, and a government-issued ID. Some banks might have a minimum deposit to open the account, but a lot of them don't. So, no more mountains of paperwork or waiting in line at the bank. You can still go with a traditional bank if you prefer that experience. But if you're comfortable banking online, it's definitely the faster and often better option in terms of APY. Okay, so we've covered a lot of ground. We know what high-yield savings accounts are, the pros and cons, key features to look for, and even how to open one. But before we move on, let's step back for a second and talk about why this all matters. Why should someone even consider a high-yield savings account in this economy? With inflation being a real worry, it's more important than ever to make sure your money is working for you. A high-yield savings account can be a really helpful tool. It can help you stay ahead of inflation and grow your savings faster than a traditional savings account. It's like giving your money a raise. And while it's not going to make you rich quick, it's a smart and responsible way to manage your short-term savings. So, if you're tired of watching your money, just sit there in a low-yield account. A high-yield savings account might be the perfect solution. But as with any financial decision, it's crucial to do your research, compare your options, and choose the account that best fits your individual needs and goals. Okay, so now we've given you the information you need to get started. Now, it's up to you to take action. Thanks for watching. See you on the next one.